All right, make sure everything's running. Good afternoon, everyone. I am here to throw a bunch of shade at Jim Cramer. Crater. Just kidding. Um, Here to kind of give you a good rundown on building a watch list based on what a bunch of other people are obviously already looking at. So if we got Jim Cramer in the mix, kind of looking at a bunch of stuff, we can kind of pick off a few real quick trade ideas from that. So let me get down to it. Give me just a second to make a couple of adjustments and get the correct window open. There we go. Okay. So I'm going to take a quick look at SPY first, and then we've got a pretty extensive list of Creamer stocks to go through here. We got about 10 of them. Not too bad. So looking at SPY, we've got kind of potential to kind of close the day with a big old hanging spinner up here. And this is all part of a big trend. We've made a big one-for-one measured move. We've come up to a very well-known liquidity zone. We've got the short-term liquidity supply zone or demand zone here. This is a supply zone. If we can't melt through this in the next week, we're going to see some pullbacks, I think. So be very aware of what the daily candle closes at the end of the day today. Will kind of give you a clue as to what to expect next week. I do expect some volatility next week, but I think probably the day after Independence Day is going to be where we start to see some movement, just based on the chart. I'm not even looking at news events or any of that. I'm just looking at the chart here. So let's kind of review a few things here. So this, you zoom out on a 2-hour chart, you got one big old rounding bottom cup, basically the cup part of expected cup and handle within a trend. And a lot of people fail to realize this, and I stress it every time I talk about it. A cup and handle is a continuation pattern. It is not a reversal. Unless it is, because we could get a double top out of this and break down. Well, kind of. And I'll show you a couple things on how to find some targets there if that takes shape. First, you'll notice the big elephant here. We got the big diamond pattern. We exactly have the divergence. We have price that broke out of angular resistance, and usually it doesn't like to spend much time in this area. It'll run from one to the other typically. This is quite parabolic on the output side of this for angular resistance. So I think we're probably going to sit in this liquidity zone and finish a cup and handle, meaning we're likely to have a pullback into next week for a mean revision, probably down to about 438 or so would be appropriate for a cup and handle. We typically have two rim lines that we map out on a cup and handle, and it happens that those rim lines fall exactly in line with our known liquidity zone here, our supply zone here. We have rim line 1, rim line 2. So we've come to rim line 2. We made an A to B, today's trend. All right, now we're pulling back. I can almost expect the handle of the cup, so to speak, to form here, and that's why I'm looking at that mean revision, possibly down to 438. That's quite a move. So it might be appropriate to be a little bit, I don't know, I'm going to be mostly cash this weekend, let's just say that. Okay, drill down into this a little bit tighter here. I've got lots of lines on my chart. That's a 70s coffee table for sure. Let's go into the 5-minute chart. I'm going to show you a couple things. Yesterday I made a video explaining how to trade this pattern, and it is awesome if you want to check out the Bullish Bears YouTube channel. I labeled it How to Trade the Head and Shoulders Pattern Using the Diamond Pattern. And it really gave us some great trade setups out of yesterday. Pardon the dog. We had one head and shoulders here. It's easy to find the quick breakover target right here. Bearish move. This isn't exactly a head and shoulders unless you call it a two-headed head and shoulders, but it's a diamond pattern. Here later in the day, we had the head and shoulders, and that was the diamond pattern, and that certainly gave us the setup we were looking for. And here we have a missing line, but that's supposed to be about there. And effectively, once we broke the angular support of this bad boy, we had a very quick trade here, right down on the bottom, and a bounce back for a full revision. This is a two-part measured move. We got leg 1, accumulation, very short-lived accumulation. Leg 2, we have trade opportunities all over this chart in these these structures within the structures. This is a 1-minute chart. So we had this range here to expansion. We had measured moves within that. We had a range of measured move contraction, and those produced some trades within that until you got to this choppiness. This choppiness was an indication that we were forming a range, and we know one rule of thumb is all ranges break. They always break. And when they do, they usually move and they give you a measured move. Well, here's your leg. That's your measure. This is your accumulation. There's your break. That whole move mirrors this one. Did it twice. So easy trades on the end of the day, towards the middle end of the day, and then a melt up trend into the area from the divergence output side of the diamond pattern right here. We crossed the angular on the bear channel and moved to the angular on the bull channel. Closed right at it. Pretty easy stuff. Now today it's still relevant. We got into our bull channel. We set up a pre-market measured move twice, trended from the open after a test of support in almost the exact bottom of our liquidity zone, ran out A to B, made an extension 2 for 1 outside that channel, came back in. Now we're setting up another leg, another attempt on resistance at the top of this zone. I almost expect this to come back to a B move down here to about 441 towards the end of the day. But as I will also say, react, don't predict. We want to react to the trade. We don't want to just try and predict, oh, this is going to make a measured move down. It can, and probably will. But we want to make sure we don't get mixed up in the setup. We want to trade the break. All right, enough said about SPY. Let's go dig into good old Cramer here. Mentions a few banks right off the top of the bat here. And this is from yesterday. He didn't post one today. So we're going to flip on from what yesterday came out. Or what came out yesterday. I'm mixing my words up. I'm starting to talk like Yoda. Maybe I am that wise. I don't know. All right, let's go to a daily chart. So Wells Fargo is right at the top of the list. You can see I've been trading Wells Fargo quite a bit. Got lots of old dope on here. Previous analyst target hasn't moved. It's still at $40.30. They do have a little bit of a bullish outlook on all of these banks, and they're pretty much, saying this yesterday. That was this candle. All right, that move's done yesterday. They mentioned it. Clean 1 for 1 measured move. Good trade. You had to be there in the open to get that. You had to know what came out of yesterday. This range expansion at the bottom of a trend. Typically, these megaphone patterns love to break out, make measured moves. Easy done. Came right to the analyst price target. They downgraded this not so long ago. There it is. So back to resistance. If you want to find a quick way to solve this riddle, look for the wicks. That is a supply zone right there. How about that? We wicked into it and turned around today. Look for a mean revision. We'll come back and test this support level around $42.25, and we'll see if we can set up for some more continuation out of this. This is a fairly choppy setup. Not the greatest trades to be had in here, but you can run some debit spreads on this and do reasonably well with trading. It's interesting for options trading, but for me, it's not a big enough mover to really be capturing most of my attention. In other words, there's plenty of better plays out there. Let's look at the next one, Morgan Stanley. Same scenario, they're bullish on it. That was yesterday, they're bullish on it. Well, again, missed the party, but we have accumulation. We have a setup in the making here for a possible measured move. We could see this set up with a pretty good idea of a trade coming out of this to maybe finish moving up into here. And that would take us for a mean revision of previous trend. Easy trade. Look for a target about 86, 85 out of this mess. There's a doji. Might get a nice Morningstar setup out of that for the day. So we could see this rally into the day, at least back up to 86.50. Let's drill down on this a little bit. Accumulation. Watch for this to set up for support here. There is a supply zone here, or a demand zone here. Wait for the moving average to kind of curl back up to see if we can resume that move back up. Starting to set up. This could be a good one. kind of take this as your demand zone here. As long as we can hold this support area, we could make at least a mean revision to here. First target about 85.90. Second target would be the opening range high-ish, 86.30 to 86.40, 50, somewhere in that neighborhood. Could get a good little day trade out of this one. That's not bad. And knowing Morgan Stanley, the options change relatively affordable for spreads for a longer term outlook of mean revision up here to the top of that 86.80 area. We could get a decent swing trade out of this. Definitely keep an eye on that. I like that trade idea. I think I might mark that one down in the watch list today. Morgan Stanley, winner. All right, let's have a look at the one they didn't like. They said everything moved bullish, or they were bullish on everything except for Citibank. I see accumulation, and I can see why they would be a bit bearish here. You know, it's pretty much our diamond pattern right there, right in front of us. So angular support, look for it to stay headed for measured move down. We could see a little bearish play out of that, but we want to make sure this bear flag breaks first. It's got to break its support level. I'm going to throw a pivot at that, and then I'm going to throw a measured move on it. So let's say about 45.85 would be a good key support area. If we break that, we could get an A to B. This wick here would play out 85.40. And then we might see a total measured move to the bear side on that. Citibank has a lot of money lent out to credit card debt holders, and I'm kind of wondering if they're having a bit of an issue with liquidity to try and get people to pay their bills. I'm going to watch this for a while. That could be a decent bear trade setup. Might take a couple more days to figure out when we break that bear flag, but target would be down here 43.12. That would be my price target for a bearish measured move. It's already made a mean revision, so the other opportunity is return to high. So definitely keep an eye on this bear flag. That can certainly set up to go either way, and we know where the support zone is. We could kind of just draw a range on this if we wanted, but we don't have to. We know where the liquidity is. If it breaks the high, 46.75, we could see it bounce back up, mean revert this guy here to about 47.55, maybe even see it peak out to like, $49, but I'm leaning on the bear flag. We'll have to see what comes out of that. Give it time. Being patient is very much key when it comes to this stuff. Disney gets a downgrade now. A little late to that party. We've been messing with Disney for a while. I've got this 2-for-1 measured move set up. Didn't quite hit it. Did make it a little bit of an overshoot beyond the previous analyst target. They haven't changed that target yet. And now they're saying they're bearish on it, but we're starting to accumulate here. This could very well bounce back up to a revision up to this $90.80 mark. Isn't a very big move. I'm not interested in taking a position on either side of this until either A, I see a big breach of this 88 target and a possible chance to finish that measured move down to like 84, 83, 80, somewhere in that neighborhood. Or we could see it break resistance and run back up for a mean revision and then break over. So we could get either side of this. I'm not interested in trading this yet. I think I'm going to watch it. There will be a bunch of dip buyers around here. In fact, there were right on this wick here yesterday. You can see there's quite a bit of demand here. Keep it on the radar, but don't for me, it's not like, a major focus of interest here. I won't put that on my swing trade list. Moving on, Micron. Making memory. We do have a nice little neat descending channel here. Let's see if we can watch me draw some pictures. Mean reversion of that would be a target of about 68.50. I'm going to borrow this. Bottom of the channel, let's mark that out too. This could be an interesting rebound. They're a bit bullish on it. Let me get their outlook on this. They raised their price target to $76. That's a bit into the stratosphere there. Let me mark the analyst target. I usually try to get them fairly close. There we go, close enough. So analyst target up here, $76. That's a bit lofty. I like a mean revision idea. The fact that they mentioned it, of course, will bring some attention to it. It's kind of artificial about the whole situation. Once you get one person saying something and enough of them fall in line, retail kind of tends to follow through. Keep an eye on it for sure. I'd love to see it finish this move to the bottom of the channel first. Around $62 would be a point of interest. I'll put this on the radar. Again, I'm going to not focus much attention for swing trades on this. Probably till about the end of next week. I want to see what happens with it. But I'll keep it in mind. I'm definitely going to keep it on my watch list, but I'm not going to put it as a swing trade alert. I think that's probably the way to go with this one. Being that it's Micron, it's a pretty decent long-term investment, they say. The dividend yield isn't great. 11 cents per share is kind of mediocre compared to the share price on it. Options income-wise, the yield is just, it's not great, but you could definitely swing trade some debit spreads on this thing. Very similar to the swing trades I've made on Intel Corporation over and over and over again. That has been a very great stock for trading. This one, it's interesting, but it's not there yet. I think we got a couple more days before this shakes out in the bottom of this channel and gives us an opportunity to take it long back above our pivot point and up to our mean revision. $76, maybe in a year, but let's look a little further left and see what they're talking about. Oh, hey, that makes sense. A little bit of the high side of mean revision on this big trend here. Okay, I can live with that. Rounding bottom reversal. It's reached just about to there already. You can see it's a nice clean mean revision. Okay, I can agree for the most part, but I'm going to take a swing on the movement in between. And that's certainly going to be an interesting one to keep on the radar. Again, I'm not going to throw a watch or an alert on this one yet, but I think I'm going to keep an eye on it. Probably a good one to watch. Getting there. Okay, let me move on to McCormick, the spice company. I do a lot of cooking myself, and this household cooks a lot. I mean, I own an 18-inch wok. I feed a family of 6 with it. We have guests now. We're currently 9 strong in this household. So I got to feed a lot of people. I love Chinese cooking. I have a big, huge wok and a huge hot flame, like 80,000 BTU propane flame to cook in. My wok has hay, but I use plenty of spices from McCormick. I'm going to give them an endorsement from me. Good stuff. Long story short, though, my wok has hay. I do use it, and I do cook a lot, and I love cooking in the wok. But take a lesson from most of the Asian families I grew up around as a kid. They always cooked in their garage because it's very aromatic. Your house will smell like fried rice forever if you cook it once in there. Trust me. Use the garage. That's what the big burner's for, outside. Anyway, looking at McCormick here, we've got a nice big old downtrend on the 5-minute chart. That's just through yesterday. Today we're consolidating. That's why I went to the 5-minute before I switched this over. But look at the daily, dude. That is range expansion. And usually when we see this at the top of a trend, we got kind of a two-piece scenario. Either we're going to start seeing range contraction and return to mean, and then a big diamond top similar to this one starts to appear, or we get a full-on bearish measured move. Now, they're a bit bullish on this. I want to wait and see what happens with this. This is a kind of a critical area, but if we get a bearish measured move out of this thing, it is a numbskull move. I mean, it's like down here, looking at like $79. Quite a move. I don't know if I want to take a chance on it, especially with this pattern here. When we get range expansion, we know the rule. All ranges break. And this is one example of one that's hard to read. It's choppy. It's very tricky to take good trades in this particular setup. But we do have an opportunity coming. I think we'll be able to keep an eye on this for coming weeks and find some opportunities. But that has been some pretty bearish sentiment to suddenly see some of the analysts be bullish on it. They didn't give a price target or anything like that. Just mentioned it, more or less. That could end up being kind of a liquidity grab. So just be careful with this one. Know that there is potential for this little bear flag to break over and finish a move quite a bit to the downside. Again, it can also be a support area where if we do resume, we got at least a shot at a mean revision here back to about the 200 period-ish. About 90 bucks is possible, maybe. Kind of keep that in mind. We can get a mean revision or we can get a bearish 1-for-1. Either way, we've got a trade opportunity coming with this. Keep an eye on it over the next few days. We may get something useful on that. I haven't had a chance to really look at the options chain on this, but it could be viable with spreads. Might even be viable synthetics maybe, but I wouldn't particularly throw a wheel trade at this. It would be more of a let's take the trader's approach rather than the income approach. All right, moving on. Netflix. Always a pleaser. It'd be helpful if I typed it into the search bar. Go out to the daily. This sucker's parabolic. That's a clean 1-for-1 measured move. Actually, it's the better part of a 2-for-1. We got 1, 2, 3. There's a 3-for-1. Look at all the accumulations in that. We got 2 and 3-for-1 all built into one. Now we're accumulating. We're in a range. This is likely to wedge out here. Let's mark that. So let's go this way, and let's go up from mean root right up to there. Watch for a wedge to form on this over the next coming week, and we could see a breakout. Of course, they're a bit bullish on it. Why wouldn't they be? They said this yesterday. They were bullish on it yesterday. Come on, that was... Anyway, we do see a nice little short-term 1-for-1 in this wedge. Resistance is right here. We've got kind of a doji. I'd love to see it come back and trace back to the base of this control bar. Let's shoot for 430. That's a $10 move. Holy smokes. I want to see that come back to a reasonable level before I go long on it, but they are bullish on it. We'll see what happens. Narrow it down, go into 15-minute chart. Kind of keep an eye on this. You've got pretty much all the makings of a decent setup, but let's be reasonable here. I'd love to see this kind of repeat what it did here. A nice little pick out, bearish measured move down, or at least a mean revision. Unless you got bullish on it right on the get-go this morning, you missed the party. Let's wait and see what happens with this. Overtime, again, this came out yesterday, and yesterday they were bullish on it. Yeah, well, it inevitably came down below where their bullish target was, I'm sure, but towards the end of the day, it would have been a better entry. I didn't see that coming, didn't catch the setup, didn't trade it, but it's got potential to move around. Let's watch what happens with this wedge, though. We can see that come into fruition. Plain as day, you can see the big diamond pattern here. We're in the diamond pattern's angular resistance area at this point here. And we can go parabolic out of it and plot a measured move, all the way up here to like 5 something, but damn, that's lofty. Let's wait and see what this wedge does first. Give it some time. And the weekly chart, we've already accomplished the high end of a mean revision from this big nasty here. And we're just kind of playing around in an area where it can either go higher or come back and test the bottom of that range. So it makes sense. Wait and see. This is definitely going to be a sit on your hands until it gives you a sign sort of deal. I don't go chasing Netflix. I know too many people who have, and they come back with, a little bit of a burn. typically. So never chase Netflix. Wait for the setup. You can be patient with that one. Moving on. An equity that they keep talking about over there in Cramer land is TJX. TJ Maxx is one of those. I don't know. I've never had any interest in trading the damn thing, but maybe I should have. Nice measured move, kind of shook out of this choppiness. Very interesting chart, but not really a attention getter until you notice this. This leg here, that accumulation break, it could certainly set up a long-term big move. Just to kind of draw on it. It's not one that I like swing trading. There's plenty of better trades out there to be had. Look for a primary target, maybe around 87.20, about half that expected move. And if it continues to break out after an accumulation right around there, we could see it resume up to like 95-ish. Just kind of not my favorite stock to trade, really. It's just too choppy. There's not a lot of smoothness there. Hard to predict. He does mention a couple others. He's got Ross and Burlington Coat Factory on there. Same kind of sector. Let's have a look. Kind of the same deal, but we got a big gap to pay attention to. More or less filled with this wick here. That's a good dividend. All right. Aha, the truth. Be aware of this angular resistance right here. Yeah, look at that big weekly diamond. Damn, that's massive. Certainly some adjustments being made within that organization because you can see management all over this. Let's wait and see, at least get to an angular resistance. I would put a price target so boldly at about 116. So another $10 up would be about a reasonable price target for this guy. You know what? Start over. Go to the horizontal line. Close enough. My price target would be about 116 out of this. We got a nice little double bottom here. We've made most of our mean revision, so if we get some accumulation a couple days, break out of this resistance here around 111, 112. Let's throw another little mark in here. Right around there, I would say the threshold would be, that's a mean revision already made. And then if we break out one for one, we'll get that. Could be a decent swing trade. Oh, heck, why don't we just mark that with the liquidity zone? I try not to waste too much time drawing pictures for you guys, but these pictures mean a lot. Let's see it get through this liquidity zone. There's going to be some sellers here. There's a bit of a supply zone. If we can melt through that, we can certainly see it extend on to a couple of those targets. Angular resistance, by the time price gets there, we should meet between 116 and 116.75, somewhere in that neighborhood. Seems about appropriate. Give it the measured move. There's your accumulation right here. Leg 1. Leg 2 gets you kind of up there. Definitely more interesting than TJ Maxx to me. I might go so far as to put this one on the watch list. I'll make a mark on it. Again, I'm not particularly interested in a whole lot of swing trades this week. I'm probably looking at the outcome of next week before I start putting out some alerts. So I'm going to be very picky with what I put in the watch list for alerts on any decent setups. But this one's got potential to make some follow through here. Certainly got some strength. The trend is pretty strong. Just got to get through this liquidity zone first to really have any confidence in it. Not to say you couldn't take a speculative position, maybe run a debit spread, 114, 116 spread, or a 115, 116 spread, or even if you can find one that's affordable in that range, 113, 115 would be appropriate. But kind of take it as a speculative position. If you start to see some loss in that thing, don't FOMO it into holding on to it forever while it melts back to a mean revision. Kick your losses out quick. Take as minimal risk in this as you can if you're going to take a position in it. But for me, I'm all about mitigating risk and maximizing potential reward. So if I find the right spread, I'll certainly mention that as well when I tag this as an alert. I think I will put this in the alert. Moving on, we got Burlington. If you do happen to catch this morning's live stream in the Bullish Bears channel, about the last 40 minutes of today's broadcast, I put out a lot of stuff to think about when it comes to learning option strategies. And man, it's a big piece to digest. But if you start getting into options trading and you start going into all the complex stuff, I mean, it becomes a bird nest of different directions you can take with your trading strategy. But the fundamental that I talk about most is simply finding a strategy that works for you and understanding how it moves, but knowing that it's far beyond just opening and closing options positions to trade them. You can adjust them, you can swap them, you can maintain an income strategy, synthetics. There is so many different ways to skin that cat that it's just unbelievable how much you can do with options trading outside of just buying and selling. Anyway, let's have a quick dive into Burlington here. For them being bullish on the whole sector, I think Ross probably has the best setup. Burlington is kind of iffy here. We've got the makings of most of a bear flag. We've got a bear trend leading up to it. Let's pull the weekly up. We've made a mean revision on this big trend here right to the T at 240 there, 239.90. Come back down. We blew through the mean revision from this trend here. We may continue running down all the way to the previous low. We might even see this thing hit like 108. I mean, it's worth looking at, but I know I'm going to have to dig into some fundamentals on Burlington to really understand this movement. But as long as we stay under that weekly 8 period, I'm definitely not going to be bullish on it. I would wait and see what happens with this bear flag here. This is going to break over and give us a nice, clean, measured move, even though it's already given us a 1-for-1 here. Could get the 2-for-1 straight to the bottom of that. Let's dig in a little tighter time frame. And the daily says the same. This is definitely looking like a bear flag. You can see the liquidity here. You can see all the sale limit orders selling this right into that strength there, just to kind of close up positions. That becomes a bit of a supply zone. Let me mark it out with a little box there. If it can't melt that and rejects that instead, we could certainly see some follow through with a bear flag here and see this continue into a big old 2-for-1 measured move. Note that price was under that 8 period and under the 20 period in this relative descending channel here for quite some time, but it has broken that here. You got the 8 period crossing above the 20. So it does have a chance to go and make a mean revision, but in the short term, we've already made a mean revision of the big trend up here, and we are already looking at a setup to where it can be one of the old pop and drop bear flags, which gives you one quick push to the top of liquidity and then all of a sudden a sell-off. Be nimble if you're going to mess with this one, but do also have a bit of an interest if it does melt through that liquidity zone for about a mean revision right around here. 190.75-ish would be a reasonable target for a swing long term coming through this liquidity, but that's very optimistic in my opinion. There is a gap to note here. Right in here, you could take it to a quick pivot target right here under this guy. So 178 would be more appropriate for short term, but only if it melts through this liquidity. There's going to be some sellers here. Let's see if we can work our way through the sellers. Other than that, like I said, they can be bullish on the sector all they want, but these individual brick and mortars, they do have some online business, but for the most part, they've kind of stuck to their guns of their old ways of the brick and mortar, and We know what's happened to a lot of the giants that we thought would never fail in the past. I mean, look at Sears, look at Bed Bath and Beyond, and a couple others. It's a bloodbath out there, and it has been. Unless you can adapt with the market, you end up looking like this. So let's see if we get a trade out of that. I'll keep it on the radar, but I'm not going to put an alert on this one particularly yet. I want to see if it's going to melt through this zone yet or not. So like I said, a lot of stuff that I'm looking at this week may not start to form a setup that's worth putting on an alert out on until about the end of next week. So kind of an alert. I'm going through the weekend almost completely in cash. That is a position for me I'm fine with. In the short term, it's earning some interest while it idles in my swept funds account. I'm indifferent to that. I will come out of the woodworks and make my strikes and be a predatory trader, so to speak, when the time's right. I'm going to sit and wait for my lunch. Kind of an old adage I've played on words on for the laws of physics. I have a working knowledge of. I'm not a physicist by far. I'm no astrophysicist or whatever, but there's one fundamental that always holds true. There is no free lunch. And if you are patient and you examine the problem and then you find out where you can earn a lunch, that makes all the sense in the world. Know that it's not going to give it to you. You've got to go and get it. You got to earn it. You got to work for it. You got to put energy in to get energy out. So looking at this, I'm going to wait patiently. I'm going to sit on my hands over the weekend, and I'm going to have a great time on the 4th of July, get some family time. I'll be trading Monday a little bit, but I mean, I'm not going to be really even thinking about this stuff till the end of next week. And I think that's going to be the idea is I'm going to wait for many setups to show themselves to me by the end of next week. So that's the ideal I'm getting behind on that. All right. Got one more to look at, and this is kind of an interesting one. The perma bulls have basically put a bear target on Pfizer. A little late to that party, but way late to that party. All right, let me. This is funny because their bear target or their downgrade target is $47. It's still above current price. Oh man, these guys never cease to amaze me. Analysts, what do they know? I guess technical analysts should come out of the woodwork and really start to shine this time in market history. Maybe that's why I'm getting a lot of networking done this year because I love being a technical analyst, and I'm kind of a nobody at this point, the way I see myself, but I'm starting to get in touch with some pretty big players out there, so that's kind of been going for me. In the meantime, looking left here, this weekly chart says, okay, that's about a mean revision of all of this nastiness here. That's choppy. There's some swing trades to be had in there. Pfizer's a great swing trading stock, typically. Around here, I don't know. We're in a bit of an unknown zone. Let's go ahead and mark this out. We've got a hell of a move here. Accumulation, bear flag has broken and then gapped down. Now we've come back to the point where we're looking to test previous support for resistance. That's today. All right. Let's see if we reject this and we can get a very quick measured move trade out of this in the bear zone here. And I'm going to draw that out. This could be interesting for at least a bearish trade. And we could see it come down to, goodness, 32.50. Brilliant. I like that idea. Let me throw this in the alert bin. Definitely want to mark that out. That has some interest for me. I do enjoy shorting the big pharmaceutical companies. No politics involved. But when they go short, man, they run to the bear targets. So we've already made a 1-for-1 here. Certainly be aware of that as well on a 2-hour chart. A 2-for-1 would complete this move halfway. So let's kind of keep that in mind. I drew target the same way, and target is just now getting pegged for some bearish movement. And I've kind of put together a bearish target on Starbucks, but I'm just sitting on this bear flag forever waiting for the break. And I'll show you that next too. But short term, looking at the 2-hour chart, 2 for 1. This move is already legged here. Would be right down here. 34.25 would be a decent short-term bear target if it rejects this key area here. It's already broken support on the bear flag. It's testing it for resistance now, today. So let's see what happens with this over the short term. And we could certainly get a nice quick bearish trade out of that. If it breaks this zone and starts to retrace here, that plan gets canceled. Just kind of know that. You need to sit and wait a little longer. And I'm going to go and look at a couple others real quick that I've had long-term setups put out on and just still waiting. So we'll start with target. As you know, I've got this massive bear measured move mapped out. We certainly broke support on this bear flag. We're in the leg 2, but we're right to the halfway point, and this is very similar to what I just showed you on PFE. Leg 1, leg 2, leg 3 finishes that move. We're accumulating here now. So let's sit and wait and see if we break even further south on that. And I still have a $98 target on target. But let's see what happens in the short term. We could see a revision back to test the previous support on this bear flag here. This is one big ass bear flag, y'all. This is a daily chart. So if target gets a bounce here and starts to run back up, we could see it retrace 152 to 154. But in the short term, we still got this setup pending, and we're in yet another bear flag here between measured move. So if it breaks the key support, which is here, oddly enough, analyst target here, 130. That's in purple. We've known that. This is old analyst target here, new analyst target here. I think we could smoke that and see a bearish 1 for 1, but we're going to wait for that trade to come to us. Certainly broke down today. It's been getting slammed today. Looking at this guy here. But we've got a key support area, and you can certainly see those 2-hour wicks start to form. There is a demand zone right here. So wait for this to melt through. If it's going to give us a bear signal, it's got to crush this support zone here and start resuming that trend. Otherwise, we could see a reversal in target. So we could say close it. As of today, I did have a short position that I put on back here on the 26th. I closed it here when I saw this liquidity. That's handled. I made a small profit there, but now I can just sit and wait. I'm in cash over the weekend. I don't have to worry about this anymore. I can let it sit till the end of the week, and then I can take the trade. And I think that's going to take about that much time to settle this out, whether we're going to bounce for a mean revision or resume a bear trade. Definitely keep this one on the radar because it's got a lot of fruit to offer if you do get a correct trade on this. If you're daring enough to take on time as a risk, you could build a condor in this chop and have expiration. Gosh, you would probably be out to August for expiration in this to have any real remaining time in the trade on some $5 wides up here in the 140, 145 zone, or down here in the 120, 115 zone. Either way, I like to minimize risk and keep those nice and wide. If one starts to win and the other starts to lose, cut the loser, Spartan that sucker, and ride the winner. You could set up to where you enter in the setup with a neutral position and then trade the break. That's fine. I'm just going to take the other approach to I want to trade the break on this. I want to stay out of the setup because it's going to waste a lot of time in this volatility. I'll be sitting on cash that is allocated for that position far too long for my comfort. So that's my take on it. Moving on into Starbucks. That's the other short. Whoops. Thumbed it. Got about 15 minutes left here. Same. Big old bear target. I've got one inside. I've made a measured move. That's what this block here within this block is. But what do we have? We have a diamond bottom here, guys. There's your range expansion. We're in range compression now. If it can't stay below the mean of this move here, it voids, nullifies that bear trade on this thing. I was getting excited when the workers were threatening a strike. I did take a short position in this mess here. I've closed it since, and I'm just waiting. I'm not going to sit here and waste a bunch of time on this thing. I'm going to wait until next week and see what happens. But we do have one leg here, one leg here. This is a 2-for-1. 1-for-1s are very common. 2-for-1s fairly common. 3-for-1s are rare. As far as measured moves go, we have the potential, but it's got to crack this support level with some force to resume even this part of this move, which is this leg here to this leg here. So short-term bear target, you're looking at about a $90 to $92 range. Long-term bear target about 88.40, or if it does a mean revision, and this is an angular here, which would meet it, mean revision would be about 105, 106. So let this diamond happen first. This is going to take the better part of a week, maybe even to the following week after next week, before we see this come to a point and that range starts to break. This will be an interesting trade eventually, but for now, I'm hands off. I'm going to sit tight and wait. I've taken a little profit off. I'll give it time and let it set up again. Take a quick look at Tesla, and then I think I can probably call it with that. All the bulls have come to Tesla. We got a 1-for-1 done. We're accumulated. We're probably a day or two away from seeing if we're going to resume the bull trend and run up to the insane bull target, or if we're going to do a mean revision back down to this key support, 207. It's been a key pivot for me for a long time. If we can't get out of this range with some force to the upside and melt through this pivot, this liquidity zone, and reach this target, we will certainly come back for a mean revision. That would be the healthy thing to expect from Tesla. But we know that Uncle Elon loves to play with his equity. He says things and does things that make it move. Pay attention. This is the time where he's likely to do exactly that. Not throwing shade at Elon. I love the guy. He's made me a lot of money. But I'm kind of looking at this as let's wait and see. We don't want to take chances getting caught up in the setup when we could just wait and trade the break. I'll quote that again. Successful traders have a tendency to spend 80% of their time waiting and 20% of the time trading. Unsuccessful traders tend to spend 80% of their time trading and 20% of their time waiting, spinning their wheels in some really choppy chasing setups type of thing. And realistically, over time, they tend to lose more than they win. But if you're patient and you wait for the setup to tell you when to get into it, trade the break, that's the way to go. Wait for it. It's coming. So Tesla here, you can see we've had a rough looking diamond pattern here. We've had the 1-for-1 bear move that's expected out of a diamond as if it was a head and shoulders. That's done. Everybody on this head and shoulders expects to find the low down here. They chased it. They panically closed this after hours to get that position closed. Some of them gave it back and had to wait till the next day for options. All right, a lot of people were short on this. Now we're at mean revision. We're right in the center of this sucker. So now we're at the threshold of we could break out and resume on up here. Very likely. I'll draw this diamond since we got a minute, and I'll show you what I mean. Let me measure this down. There's one. I'm going to have to draw this backwards and then forwards, aren't I? Line it up there. I can be over the side. These are fun to draw because they're not always perfect, yet they move in a dynamic way. And you'll think I'm a weirdo for drawing it backwards first, but it makes it easier to find the legs. And this one's pretty obvious. The idea is you end up drawing a parallelogram, and then the important part is when you find the regression lines. Let me adjust that just a little bit. Okay, now we have some data to work with. So head and shoulders pattern gives you some interesting things to pay attention to. And in Tesla, this is kind of a rough looking diamond. It's there. We could certainly draw the line back here if we wanted to. We didn't need to. The important part is that we have an angular resistance above price, which is the bull channel. We have a bear channel, angular support below price. We crossed the regression line, and I always tend to subdivide these two, split them in half. Half and whole moves in price action are expected. They're very common. So in splitting this, now we've got price targets for the break of that diamond. There's the break. That was the bear trade. That gave you a measured move to the bears right here. That is a methodical target because that's exactly a point of interest where they were interested in covering. So by the end of the 26th, you had better have closed your bear trades if you were in options, because you can only trade those during market hours. Knowing that most people were expecting it to resume all the way down to the bottom of this control bar is exactly what happened there. All of a sudden, everybody had spreads on, 235 to 230 or 225 to 220, whatever they decided to do on the bear side of this. They got caught, and they ended up giving most of that back by the next day, right? So regression line plays in. That spinner there on the opening range gave the exact time that everybody was finished getting out of their bear positions and flipped into bull positions. Some of them, most of them were too much in shock from giving most of their profit back to go and take another position here. So then it melted up, gave us a nice clean 1-for-1 up. So with options trading, pay attention to these things, and it gives you exact targets to get in and out of trades on. That's the beauty of it. So everybody else sees the head and shoulders pattern. They expect it to resume the entire bull trend, or revert the entire bull trend, so to speak, back to that support area. It's not always going to happen. In fact, it almost never happens. Knowing how to trade the head and shoulders pattern is very important. That's why you can kind of draw the diamond pattern on top of a head and shoulders pattern, and suddenly you have an edge. So that's why I draw these things. I'm looking at a head and shoulders pattern, or any confluence of price, or any what's the word I'm looking for? When you get a continuation pattern has accumulation. We have any kind of accumulation pattern where price is kind of wandering around in a range and eventually building out to a breakout. This gives you an edge to know exact price targets on your options trades, and that is beautiful right there. All right, it also gives you a nice little double bottom here. Very common. We got L1, H1, L2. Break of H1 is bullish. There's a bull trade. Again, division line in that upper half of the bear channel gives you a really quick entry target. So you got leg one, you might have missed on the breakout of the double bottom. Okay, gave you a whole second leg. There's a 1-for-1 measured move to be had right there. And went to about the revision line of the diamond pattern itself. Now we're in an even longer 1-for-1. So if you take this range here, there's your accumulation. We're right up against angular resistance here. If we're going to make a measured move, it'll probably split the bull channel. So first targets will be easy to find. Draw it right there. Target by the time Monday finishes, it'll be a short day. We could see 274 as a good bull target for Tesla if it breaks this line. It may not happen till later in the week. Eventually, if we end up in this bull channel, we've got a pretty good shot of pushing up right against this liquidity zone up in the 300s. So pay attention to this. I'm going to keep this as an alert. We could see this pull off a nice clean 1-for-1 and hit right around in this area, about 274, 275. In the meantime, wait for that break. It's got to break this angular resistance first. But these diamond patterns have been just awesome at defining price range and also locating price targets on common patterns. That head and shoulders is unmistakable. Everybody and their mother shorted it here. All right. They were expecting a lower range and it didn't happen. Then they panicked and covered, gave some back. Some of them gave it all back depending on what expiration they had. Some people went nowhere, missed this entire trade, and screwed themselves because they didn't close it in time. That creates a lot of volatility in the options chain that falls off. The implied volatility grows up to that moment where the trend changes. The day after, it collapses. So all the value gets sucked out of those, even if they're in the right direction on the trade. So that's when you take advantage. Low implied volatility gives you an opportunity to enter a trade. So what I did when we crossed above this guy here, this split here, I went long. So I went and got into some debit spreads. They're way up there in the 300, 305 range, and they're a bit more expensive than I'd like. I paid 9 cents a piece for those bad boys, but they're already nice and profitable. So I'm going to sit and wait through. That's probably the only position I'll hold other than cash over the weekend. Unless I can take a sizable profit on it today, or I can just adjust it. If I want to lock this in as if this has a chance of rejecting here and coming back to the mean, I can convert that strategy or swap it into a butterfly. It's not quite in my favorable profit zone to swap it to a butterfly just yet, but if it pushes a little higher, I probably will be. So I'll wait and see what Power Hour brings me for Tesla, but we could certainly see some good plays coming out of that. Certainly keep an eye on this range and know exactly where those targets are. I mean, it's wonderful to see that you can draw lines in the past and then see price react to them methodically every time you come on the output side. All right, well, thanks again for joining me. I think that's about it for wrapping up. We got to throw a little shade at Cramer, but realistically, it's because we're patient enough to wait for better setups in the next week. Got a couple on the watch list. We've got Morgan Stanley and Ross and possibly Pfizer. I'll probably lean on Pfizer more than Ross because it's a better chart to trade, better setup. So I'll put at least 2 in the watch list for today. Beyond that, I think I'm going to just wait until the end of next week before I start really getting into some swing trades. And I think we could have a few bearish setups in the mix too that are more important because they're faster. Thanks again. Thanks for joining me. I will see you guys next week. I apologize if I missed replying to any comments. It's kind of hard to pay attention to all this stuff, but at any rate, I'll get back to you. Jesse Jolly reaching out to you. I just see your comment now. I got a few seconds to read it. Okay. Pfizer is way underpriced. I've been killed on my long-term hold. Play it bearish and you get crushed. You can. Yeah, absolutely. Yeah, we could see it hold 35. Okay, I can agree with you there. But like I said, I'm gonna kind of keep an eye on that thing. I could see it going either way at this point. So sure, we can make a nice revision on that thing, get a bull trade out of it, but just be nimble, man, because I know a lot of people missed this whole entire game shorting this. I didn't miss all of it. I got a couple of these. But now we're in a zone where we've got a chance for one more push down, and sure, you could see a lot of people trade this bearish and get smoked here. But if this, then that. I'm going to wait for the setup to finish, and if it gives me a short-term short, cool, I'll take it. If it doesn't, I can go back the other way. I don't have to always be a bear. I can be a bull. But anyway, let's see what happens next. All right, guys, thanks again for joining me. We'll see you next week.